Welcome back, Focus Learners. I'm your host, and you are tuning into The Explainer. Today, we're taking on a massive foundational pillar of our modern society. It's something we literally all interact with, yet, very few of us actually take the time to truly deconstruct. Our mission today? To totally demystify insurance. We're going to look at the exact mechanics of how this massive pool operates so you can see exactly why this global safety net remains absolutely essential today.
So how do we protect ourselves against the unpredictable? Seriously, this is the fundamental question right at the heart of adult financial responsibility. Life is full of risks, right? Accidents happen, property gets damaged, and totally unexpected health issues pop up out of nowhere. The stakes are incredibly high when it comes to protecting our families, our assets, and our futures. Setting up our focus today, we really have to understand the systems in place that prevent a single unpredictable event from causing total financial ruin.
Okay, let's dive into this. Here's our agenda for today. 1. The concept of risk pooling. 2. 8 types of coverage. 3. The 7 guiding principles. 4. Advantages versus disadvantages. 5. A spotlight on life insurance. And 6. The global insurance landscape. We're taking a structured, logical journey from your individual personal risk all the way up to the global economic scale. Section 1. The concept of risk pooling. The basic contract of protection. Before we look at the global landscape, we absolutely must start at the individual, microscopic level.
At its core, insurance is a contract, represented by a policy, where an individual or entity receives financial protection or reimbursement against losses from an insurance company. Breaking that down, it's basically a baseline contract built on mutual financial protection. You enter into a legally binding policy where you pay a little upfront so that if disaster strikes, a corporate entity covers the massive loss. It's kind of like a financial safety net for a tightrope walker. You don't ever want to use it, but just knowing it's there allows you to take the steps you need to move forward in life.
And here is the absolute secret sauce of the entire industry. It pools clients' risks to make payments more affordable. Imagine 1,000 people paying $10 a month when one person's car breaks down. Well, the $1,000 repair is easily covered by the pool. Because not everyone is going to suffer a loss at the exact same time, the company can use the collected funds to pay for the losses of the few. It takes a catastrophic expense for one person and makes it affordable by spreading it across many. That collective pooling is exactly why the system remains such a reliable safety net.
Section 2. 8 types of coverage, from massive to microscopic. It's fascinating how this insurance mechanism scales to fit vastly different parts of our daily, unpredictable lives.
This pooling mechanism covers literally every facet of modern life. We've got your massive macro protections like life, health, and property insurance, right down to the daily commute with motor and cycle coverage. Travel insurance has your back on trips, and then there's mobile insurance for when you accidentally drop your phone in the toilet. There's even what the industry calls bite-size insurance. This is highly specific micro coverage for super brief periods. The mechanism just scales beautifully.
Section 3. The 7 guiding principles. The rules of the game. These are the foundational rules that make this massive system actually work fairly between the individual and the entity.
To make this whole thing fair, we have strict rules that legally bind the client and the company to act responsibly. First up, utmost good faith. This means total honesty is required from both sides when setting things up. Second, insurable interest. You actually need a financial stake in the asset. You can't just secretly insure your neighbor's sports car hoping they crash it. Third, indemnity. This ensures you're made whole again after a loss, not making a profit. And contribution prevents you from double dipping and getting paid twice for the same loss across multiple policies.
Next is subrogation, which is the insurer's right to chase down the third party who actually caused your damage so they can recover their money. Then we have loss minimization. Basically, you can't just stand by and watch your house burn down. You have to act to prevent further loss. Finally, causa proxima, identifying the nearest cause. This means figuring out the exact immediate nearest cause of the loss to see if your policy actually covers it. These rules dictate the everyday reality of filing claims.
Section 4. Advantages versus disadvantages. Weighing the realities.
Now, what's really interesting about this slide is how it gives us a completely impartial, balanced look at the realities of having insurance.
We really have to contrast the massive macroeconomic benefits against the very real individual pain points. On the advantages side, insurance provides immense security, encourages savings, acts as a huge source for collecting funds, and heavily encourages international trade by spreading risk around. But let's be real, on the disadvantages side, there are long, painful legal formalities, the constant risk of fraud, agency, or crime incidents, and it's frankly not for all people. It can be highly expensive, with premiums rising in subsequent years, alongside the headache of temporary terms and termination clauses. Yet despite those personal friction points, the global security and trade it unlocks is exactly why insurance remains an essential pillar of today's economy.
Section 5. Spotlight on life insurance. The ultimate safety net. Let's shift our focus to perhaps the most critical and heavily debated type of insurance out there.
Life insurance carries immense gravity. It's a contract between a policyholder and an insurer, often properly termed an assurer in this specific context, where the assurer promises to pay a designated beneficiary a sum of money upon the death of an insured person. It is the absolute ultimate act of future-proofing, establishing firm financial stability for your family when you are no longer there to provide for them. It's the concept of risk pooling applied to human mortality itself.
Section 6. The global insurance landscape. The titans of the industry. We're zooming out now from the individual beneficiary to the massive global scale that proves just how essential this industry is to the world economy today.
Our top 5 global titans really span the earth, showcasing the massive, diverse geographical footprint of risk pooling. We've got Allianz SE out of Germany, Prudential Financial and Berkshire Hathaway in the US, AXA SA in France, and Nippon Life Insurance Company out of Japan. To put this into perspective for you, these giants manage trillions of dollars in assets. That is literally more money than the GDP of entire nations.
Rounding out the top 10, we have MetLife and Legal & General Group in the West. But check out the incredible dominance emerging from the East: Ping An Insurance Group, Company of China Limited, and China Life. These titans represent an unbelievable amount of capital collected and protected globally. That exceptionally strong market presence in the US and Asia underscores that global risk pooling is a universally essential economic engine sustaining modern society.
We've seen how risk pooling removes catastrophic financial weight from the individual, scaling all the way up to fund global economies. But knowing the realities and the escalating risks of our modern world, I have to ask, is your personal safety net actually strong enough? Take a look at your policies today, understand your coverage, and ensure you're fully prepared for the unpredictable. Thanks for joining me on The Explainer.